In this lesson, we are going to be focusing on patterns. So what are patterns? Well, patterns are recurring moments of price action which we see across all of our markets. And for teaching purposes, we will be referring and using terminology associated with mountains. And the reason for this is simple. If we draw out a little mountain range like so, this is the visual we can expect. And you can see how this fits quite nicely with what we see on our charts. Now, the creation of these mountains or these mountain ranges is created by what is known as our peaks and valleys. So we have peaks and valleys. And in this lesson, we are going to be focusing on our peaks and valleys. So if we use BAT against Bitcoin here, we can show some nice examples on the weekly time frame of peaks and valleys. So we have the movement up, which creates the peak. Followed by that peak is the movement down, which is the valley. Once that is finished, it creates a new peak. And you can see how these peaks and valleys are constantly formed and one valley runs into the creation of the next peak, and one peak runs into the valley of the next. So one peak runs into the creation of the next valley, and then you see this big peak and valley here. So, and followed by that valley, you get a new peak. So these peaks and valleys are constantly reoccurring. And we can see this clearly on the weekly time frame here. Now, in the previous lesson, we discussed the S-curve, which is something we see in all of life. So if we actually add a moving average here, so 25-day moving average to our chart, this white line, what this moving average shows us is it basically averages all of the price action, and it essentially smooths the data on our charts. But if you actually look at our candlesticks, we do not have this smoothness. We have these sharp movements up and down. So we have these jagged left edges and jagged right edges. And it creates this real nice mountain range visual. And as we said, the S-curve is something we see in all of life. For example, you could take an athlete's performance and you think about an athlete's performance. So they could be performing well. So data and statistically, they may be moving up like this. Okay, so they're performing well. And they're eventually going to get to a moment where they begin to actually move down, and the peak of their performance has ended. And this is going to likely move into what would be our valley, the trough, okay? And following the trough, they may then think, well, you know what, I need to practice something. So then they go into this kind of phase. And if you think about accumulation distribution, what do you have? You have the distribution point, followed by the move down. The athlete begins to practice, price begins to go into accumulation. And followed by that, they may result in upward incline and eventually create then their highest form and the highest peak, okay? Which is very similar to the price action we see. And this all ties in with human psychology. And it is human psychology which actually creates our price action on our charts. Because if you think, if traders are buying in here, they are going to look to sell in profit up here. And following that, they're then going to look to rebuy at a lower price and sell at a higher price. And this is what creates these peaks and valleys on our charts. So patterns really are the basic way in which we can see what is occurring in our markets in the moment. So let's clean up our chart a little. And a nice way to remember peaks and valleys is this. So if we can actually do this up here. Use the brush tool. We have peaks. We have peaks. And if we actually change the color, so we'll do this in green. To remember peaks, you have the creation of that upward movement, which is obviously your A, like so. And the peak ends up creating what on the opposite side? It ends up creating the valley. We'll do that in purple. Change this to white. Get there in the end. And then we have peaks and valleys. So it's a really nice way to remember peaks and valleys. That Y a little bit neater. There's also a nice quote we can use to remember this. Between peaks, there are always valleys. How you manage your valley determines how soon you reach your next peak. So let's dig a little bit deeper now, and we are going to remove these. We're going to focus on this first peak and valley which we created. down here. And we're going to use the daily time frame to look at this. So the creation of this peak and valley then, the accuracy is, we are going to, and we'll redraw this, we are going to attach this bottom left point using the magnet tool, and we are going to place it on the swing low. We're going to drag it up to the swing high, and initially it would be to this swing high, and then we're going to drag it all the way down to the bottom of the move, like so. Now, visually, we can use this triangle tool to help us see this, so to help us see our peak and our valley. But really what this is representing, this peak and valley, is really just showing us trends. So we have our trend, so our level of support from the swing low here to the swing low out here, like this. And then on the right side, so we kind of have this jagged right edge, we have this trend, and the initial creation of the peak is our jagged left edge. And actually we can then remove this. And this is all a peak and valley is, guys. It is trend, because it is the trends, which we know are support and resistances, which create a binding of price. And this is formed through support and resistance, our horizontal levels, but also our trends. Now, if you was to imagine what the perfect mountain would be, it would be this, something like this, which would look like this, where we kind of have this base of the move as well. But you see how this is not created in this move, and that is because this support level is respected very nicely. You know, it starts here, it's created here, and then it is used in the future, as you can see. And if you go further on in the future, you can see how this level of support becomes resistance actually in the future. And that is the dynamic nature of support and resistance. Something is support until it is broken, and then it turns into resistance, and vice versa. And you see how well these support and resistances create ignition and momentum. You break this trend, this downtrend, it creates a movement up. So there really isn't this arbitrary pattern which exists, but we can use that triangle tool and the creation of this peak and valley to help us to train our eye to see where these points of breakout can occur in our markets. Now, there are random trends everywhere on our chart. If we just mark a few now, you know, you see this shallow uptrend here. You know, you move over here, or prior to that, you have this downtrend. You have this mini uptrend here. Followed by that, you have a smaller downtrend. And these trends exist all over our charts. But it becomes about being able to identify and understand what the important trends are. And you need to understand when a trend is officially broken, so when it is lost and gained. You have to understand what the strength of the trend is and what dictates that strength. It does become a deep and refined concept. But to begin with, and what is important takeaway of this lesson is that it is trends which help develop and create our peaks and valleys through the respect of support and resistance. And we can use our triangle tool to help us to quickly show us our swings and our potential points of breakout. Now we are going to look at and dissect further some of the other patterns which we see across the TA industry.